Hey everyone, this is Dave Dubeau with another episode of the Property Profits Real Estate Podcast. Today, zooming in from beautiful Asheville, North Carolina, we've got Chris Larsen. Chris, how are you doing today?
I'm doing fantastic, Dave. Excited to be here.
Well, I'm excited to have you. It seems like just a few minutes ago, I was on your podcast. So it's a
Indeed.
lot, it's a lot of fun. So Chris is a very, very accomplished real estate entrepreneur. He's a podcast host. He's a multifamily guy. He's a syndicator. He's raised millions of dollars for his real estate deals. He's a very smart guy. In fact, my goodness, I'm looking at your bio here. Degree in Biomechanical Engineering plus an M.B.A. thrown in there just for good measure. Worked for many, many years, almost 2 decades in the medical device industry. Was that primarily in sales, Chris? Is that what you're?
Yep, absolutely. Yeah, mostly in sales, and really, it's a very high service industry. So if you look at it, it's a small portion of sales, lots of service, but absolutely sales.
So, Chris, I don't usually do this, but I think because we've talked with a lot of people that are into multifamily and syndicating, so that's nothing really new. However, what I find really fascinating about you really is the backstory about how you got into real estate, your whole philosophy around financial independence. So if you don't mind, can you just kind of walk us through what took this bright young guy, in getting all these degrees and doing smart stuff, what got you into real estate investing and what keeps you going, motivated these days?
Absolutely. Simon Sinek talks about like the why, and, people are like, why do you do what you do, Chris? You don't, if you're financially independent, you don't have to do anything anymore, from a work perspective, why do you do it? And, I'll kind of dive deep into that. And I appreciate the compliment on the intelligence, but it's funny because I never saw myself as that smart because I spent all these years, around engineers who were getting PhDs, and then my career in sales, I work with neurosurgeons and orthopedic spine surgeons. And then when I was racing bicycles, the people I was racing against, they went on to become professionals. And, I thought I was, pretty good, but it's interesting how your perspective shifts and changes over time. So I've always tried to continue to educate myself and look for smarter people that are out there. But what really drives me, Dave, I talk about this in my book, which I'm happy to share with you if you're listening today. But when I was 5, my father passed away, and that had a big kind of like subconscious impact on me. But what was an even bigger impact was my training partner, my roommate, my best friend, was like a brother to me. Chris Strader passed away when he was only 18 years old. I was 19. I just turned 19 a month before. Not even. It was June 21st. It was less than 2 weeks after my 19th birthday. He had a massive brain hemorrhage and passed away. And I get chills, kind of still thinking about the day. But I went back to school. I was in college at Virginia Tech, studying engineering. I put my head down. I raced for another year. And after having the most successful year of my life racing, I was an All-American cyclist. I was winning, these pro-am races. So I was at a level category 1 in cycling, which means you race with the pros. And I was winning local and some regional races. And what I found was I wasn't happy. It was hollow. I went back to school. And I quit racing. And I was really lost because all I wanted to be was a professional cyclist. I didn't really want to be an engineer. I thought, I'm going to be a pro. I'm going to go back to school and figure out what I wanted to do. And long story short, I got an M.B.A. because I was interested in finance and investing. And I wanted to be an investor because I knew if I was going to live my best life and I was going to honor Chris, who didn't have a chance to live his life, I had to have the financial means to do it. And I had already been investing for a couple of years. And again, I talk about that full story in my book, but I thought, okay, if I can get on a track where I can be financially independent, I can really live my best life and do that. So I set this plan in place to be an investor. I bought my first property at age 21, so more than 2 decades ago. And, ultimately, transition that portfolio into multifamily real estate, commercial portfolio, which is what we focus on today. But what has always driven me is that that gift that I feel like I'm given every day that I wake up. And really the pledge I made to myself, which was 2 things. 1, I would live every day to its fullest. I didn't want to have any regrets. And 2, that I would honor Chris's life by making the most out of the life that I've been given.
Wow. It is amazing how some of the crappiest experiences in our lives can, if we choose to, be transformed into something that just brings so much more meaning to our lives. I haven't always been successful at that myself, but the times I have, it's, when you can turn that horrendous experience around and create something, I don't know, create something positive out of it, but help you propel yourself towards something more positive. That's the ultimate way to turn things around, definitely. Yeah. So hats off to you for that. So your father passed away when you were very young. How did you kind of come up with investing as being your goal? Because I mean, that's especially the kind of schooling that you were taking, what you were going through in university, the people that you were working with and hanging out with, they probably didn't have that mindset. They probably had the high paid employee, but the employee mindset. So where did that come from?
You're absolutely right. So I think I was blessed a bit genetically. My father that passed away was an entrepreneur. I just read actually that Warren Buffett sold Kirby. So he owned the Kirby company. My father had a Kirby distributorship. He had a plane, which unfortunately was how he passed away when his engine failed over Lake Michigan. He had Harley Davidsons, a boat, a nice home in a nice area in Maryland outside of Annapolis. So if you looked at him from the outside, you'd say, oh, he's pretty successful. I didn't get to know him, but he was an entrepreneur. But what I saw a couple things. I saw my parents; they were savers. We didn't have a ton of money after my father died. My mother remarried. We were comfortable enough, but it was definitely a firm middle class lifestyle. But as I got older, and then when I was in school, what I found was a lot of my peers, it didn't excite them to become an engineer. And there was a movie called Office Space that was out there.
Yeah.
And people were miserable. And I'll never forget watching that with my buddies. And it was we're like, well, nobody's going to end up like that. And because I didn't want to be an engineer, I wanted to race my bike. You don't make a lot of money racing bikes.
No.
So the same family friend that introduced me to cycling gave me a money magazine. And it was right after the Roth IRA bill was passed in Congress, creating the ability to have a Roth IRA, and it talked about compound interest. So immediately I started an account, started a Roth IRA, invested with Vanguard. I was day trading and learning all this stuff. Read Rich Dad, Poor Dad and learned about that. My uncle was an entrepreneur who I spent a ton of time with. He taught me how to ski, how to kayak. I taught him how to ride bikes. We did a lot of riding together. He was a real father figure for me. So I had kind of these, I had the negative influences of my peers that were in engineering and kind of what that looked like. And then I had these positive influences from an entrepreneurial side, also again, like Rich Dad, Poor Dad and some other websites that I was reading at the time because the internet was exploding in the late 90s. So I had all this information that I was reading. And what I kind of imprinted on me as a cyclist, you're probably not going to make a lot of money, even if you're a professional. So I was looking for other ways that I could pursue my passion in life as a cyclist, but not give up the ability to, have a decent life that was out there. So I started a loft business in college. I started investing.
You started what kind of business in college?
Lofts. So these loft beds that you would sell to students for $100. It's a wooden structure, and you put your mattress on it. And that means you'd have the whole floor underneath of it to do. So I'd make like $10,000 the weekend before college started, which for a college kid, that's not too bad.
Very good.
So again, I had multiple different influences. And then in the back of my head, I mentioned when my father died, I had this subconscious influence. And what I mean by that is I got closer to the age he died, which was 41. What I realized was I had this ticking clock in my head that said, hey, Chris, you might not be here for your family. You might not be here, tomorrow. Mm-hmm. And I knew I had to put these financial pieces in place so that my family was secure. And that's why I'm so passionate about life insurance. But also that, I didn't have to work my life away and do that.
Wow, that's another fantastic idea. Hold on to that thought for a sec. We'll be right back. Now, are you a real estate investor who's run out of cash or credit to grow your portfolio? Are you looking to grow your portfolio using other people's money and raising capital? Well, I want to show you how to raise 6 figures or more in 6 weeks or less at my upcoming Investor Attraction Workshop. You can get your ticket and find out all about it at investorattractionworkshop.com. We're going to spend a full day taking a deep dive into this roadmap that I've used to raise millions for my deals, and I've helped other people just like you cumulatively raise hundreds and hundreds of millions of dollars for their deals as well. So again, you can check that out at investorattractionworkshop.com. And as a loyal listener to the podcast, you'll get 50% off your ticket when you use the discount code podcast. That's right. Discount code podcast at investorattractionworkshop.com. See you at the next workshop. Yeah, very, very, very interesting because you're so close to it, so much at such a young age, right? Surrounded by this kind of profound loss. All right, well, let's switch gears for a few minutes here, Chris. And now you're into multifamily investing. You're into syndications. You're going strong with that. That's going great. Why don't we rewind a few years, 5 or 6 years, when you first started the whole syndication thing? Can you just kind of walk us through briefly? How did that look at the beginning? What kind of process did you go through, and where are things at right now? What's working really well for you for finding investors, raising capital, syndicating deals these days?
Absolutely. So Dave, you got a great program. We talked about it when you were a guest on my podcast, which you haven't checked it out. Make sure you go to the website, nextlevelincome.com, and check out Dave's interview. Super tons of value in there. But I had a portfolio of single family rentals that I managed myself for 15 years. And what I realized was after 15 years, the returns weren't that great. They were a pain in the butt. And you just don't want to be dealing with, 10, 20, or certainly not 100 tenants on a daily basis.
On a house by house basis.
Exactly. Like there's got to be a better way, right? Yeah. And I was in a meeting with my wife and I was talking to somebody about this. He goes, "Hey, you should talk to my friend. They syndicate." I don't know if you use that terminology, but they syndicate multifamily deals. They bring investors in for apartments. And I'm like, okay. So I talked to him. I'm like, this makes so much sense from a demographics perspective and also from a scale perspective, because here I am, I'm a professional in the sales industry working 60 to 100 hours a week. And that's not an exaggeration at all, and I didn't want to deal with anything else. I wanted to spend time with my young children and my wife. So I sold my entire portfolio, moved into multifamily. And eventually my first partner and I, 3 years later, we started doing the same thing. And what happened was I realized talking to people, there was a lot of people that I knew that had the same issue. They wanted passive income. They didn't want to deal with things themselves. And people just kept asking me like, well, what do you do? What do you invest in? How do you structure your insurance? How do you structure your finances and these sorts of things? And my MBA is in portfolio management. So they were asking me these questions. And as the years went on, I realized I have to, I feel this obligation. I should help people, like teach them a shortcut, because I had people help me out. And that's really why we founded Next Level Income, was to teach people shortcuts to become financially independent. So, and that's the reason why we now syndicate deals, because, obviously it's a way for us to buy bigger deals and have less risk and do well as general partners. But the other reason is, part of our mission is giving investors these opportunities to do it. So over time, I'd say I kind of stumbled through, like, when we were talking, when we had you on our show, but over time I figured out that, having a podcast to educate and, giving people these opportunities, it's a great synergy between my experience, my skill set, and, what investors are looking for out there today.
So if you don't mind, for folks that are a little bit rusty on what syndication is,
yeah,
how does it look like for you? You're the general partner. Are you proactively finding the deals, getting them under contract, raising the capital for them? And then once you buy them, are you actively managing these properties, or what does it look like for your particular model, if you don't mind sharing, Chris?
Absolutely. So starting off, like many entrepreneurs, you do it all, right? My partner and I, starting off, it was everything. Now as our business has scaled, we have teams. So we have an acquisitions team that goes out there and they're traveling on the road every day. We have an individual that manages all the property managers for our apartment. We have somebody that does all the underwriting, secures the financing. And I've kind of, over time, I continue to underwrite deals. Actually, as soon as I hang up on this podcast, I'm driving to Charleston, South Carolina, where we have a deal under contract to tour that deal and go through some of the final underwriting processes and due diligence on that. But I focus on the underwriting. I focus on the investor relations side. You mentioned the capital raising portion. It's kind of, maybe it's the salesperson in me. I still enjoy educating investors, but also that ticking clock when it comes to raising capital for a deal to get it done. And, so I focus a lot on that part as well. And then after the fact, overseeing the property management, making sure that the right levers are turned, levers are pulled, the right knobs are turned to make sure that everything is going well, and eventually communicating to investors as well.
Very cool. So
yeah.
From 5 years or 6 years ago, when you first started syndicating to now, what did the portfolio look like then? What does it look like now? Because it sounds like you got a pretty big team going on.
Yeah, so we are, let's see here. I think the current acquisition will put us at 12 properties in the portfolio. We've had some exits here recently. That's why I said I think, we're at like 12, 13. Total, I think this is our 18th total project, over the years. When it started off, I was just an investor myself in 2 deals. That first year, that's actually why I love Charleston, South Carolina. That was the site of my first syndication that I personally invested in. So every year we do somewhere around 4 deals now. So the portfolio grows. Some deals cycle through full cycle.
These are quite large apartment buildings. I'm assuming. Is that correct? What size are we looking at?
Yeah. So when it comes to apartments now, Dave, we love the Southeast in the United States, and we're typically targeting properties that are $50 to $100 million in scope. So really institutional quality assets, B+, A value add deals. So a little bit less of a heavy lift than those 70s vintage, 70s built properties when we were first starting out, that were little heavier lift. Cap rates have compressed a lot down in this market in that area. And we still see there's some good value to be had in the properties that we're going into if you can efficiently manage them and really, like I said, turn those knobs and pull those levers in the right places.
Awesome. Fantastic stuff. Chris, if people want to find out about your book and find out more about you and connect with you, what should they do?
Yeah, thank you. I told you I could get the book for free here if you're listening. Just go to nextlevelincome.com. There's a book link. You can put your email in there. You'll get a free download of the ebook. And
tell us what the book is again.
Next Level Income. Next Level Income. And I'll even send you a copy if you're in the United States or Canada for free if you put your address in there.
Fantastic. Very good. So again, nextlevelincome.com, correct?
Yes,
so
sir.
I'll have all of that in the show notes. But Chris, thank you very much for sharing your story, your inspiration. I think that was great. I mean, it really goes to show how something can really put things in perspective and really help you dial in your why. And I don't know, I'm assuming, but once you've got that why really figured out, the how becomes so much easier. Would you agree?
It does. And that's really, I tell my coaching clients, Dave, pick your vision, where you want your future to be. And just like if you're driving and you're using Google or Apple Maps or Waze or whatever you want, sometimes you put it in that destination and it takes you on that route that you think it's going to take you on. Sometimes there's a detour that happens and you may not know where life is going to take you, on that detour. But if you have a clear vision of where you're going and why you're going there, you will get there.
Yeah, you'll get back on track. Been a lot of fun. Thank you very much, Chris.
Thank you, Dave. It's been a blast talking to you.
All right, everybody, take care, and we'll talk to you on the next episode. Bye-bye. Well, hey there. Thanks for tuning into the Property Profits Podcast. If you like this episode, that's great. Please go ahead and subscribe on iTunes. Give us a good review. That'd be awesome. I appreciate that. And if you're looking to attract investors and raise capital for your deals, then I'm going to invite you to get a complimentary copy of my newest book, right back there. There it is. The Money Partner Formula. You can get a PDF version at investorattractionbook.com. Again, investorattractionbook.com. Take care.